Good afternoon, friends. This is surprising news. Many are expecting big changes to go into law soon. Congressional lawmakers say a tax law could get a major overhaul, and this may lead to millions of Americans receiving a larger tax refund this year. My dear friends, I'll be going over what you need to know, so please make sure that you watch until the end of this video. Also, every Friday, I will be announcing several winners for the Walmart gift card giveaway. If you would like to enter these weekly giveaway, friends, do make sure that you click and like several of my videos, and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning these giveaways. According to CBS News, a tax provision that is part of the former president's 2017 Tax Cuts and Jobs Act could be in line for a last-minute overhaul, potentially delivering larger tax refunds this year to millions of Americans. The current issue revolves around the state and local tax deduction, commonly known as a SALT deduction, which was restricted to $10,000 under the former president's notable tax law. However, a new proposal suggests raising the limit to $20,000 for married couples, with the change being retroactive for the 2023 tax year. Once approved, this proposal may result in larger tax refunds for millions of married taxpayers in 2024.
I would yield such time as the gentleman shall consume to my friend from Pennsylvania, Mr. Perry.
The gentleman from Pennsylvania is recognized.
Well, I thank the gentleman from Texas, and I applaud my colleagues on our side of the aisle for working hard to try and return some of the money to hardworking people. I'm always for that. If you're working, you should keep the money that you earn, whether you're corporate or whether you're individual. But here's where I have a problem: this refundable tax credit. See, my folks get up every day. They get up early. It's usually dark. They put their kids on the school bus and they go to work to afford their bills. By the way, which they can barely afford right now. They can't afford their groceries, their gasoline, their credit card bills. They can't afford them because the federal government is flooding the economy with money. And we're getting ready to flood more because, ladies and gentlemen, regardless of what anybody thinks, if you're here illegally with a Social Security number, you're going to get the money. Now, I got a news flash for you. Little kids don't get the check sent to them even though they got a Social Security number. But their parents who are here illegally do. And it's going to happen by the millions. And my folks, the folks that are working hard to put food on their table, are tired of paying for that. We should reject this. I yield the balance.
Before the cap on the SALT deduction, taxpayers could subtract all their state and local taxes from their federal taxes. Some critics argue that this strategy primarily benefited wealthy homeowners in high-tax states like New York and California. However, others highlight that the $10,000 cap is affecting middle-class homeowners in regions where property taxes are increasing. Additionally, some consider the $10,000 cap a marriage penalty, as it applies to both single taxpayers and married filers. Unlike most tax provisions, which are higher for married couples who file joint returns, the SALT deduction limit does not account for the combined earnings of two people. Representative Mike Lawler, a Republican from New York, presented the proposal in a Thursday committee hearing, emphasizing it is a pro-family tax measure that corrects an injustice and promotes fairness. He mentioned that constituents in his area are grappling with higher housing costs and inflation, and providing tax relief could assist them and taxpayers nationwide. According to a recent estimate from the University of Pennsylvania, doubling the SALT cap to $20,000 for married couples would decrease federal tax revenue by approximately $12 billion. But in comparison, the SALT deduction costs the federal government $69 billion in tax revenues in 2017, the year before the $10,000 limit was imposed. Also, according to CBS News, the proposed law, called the SALT Marriage Penalty Elimination Act, would raise a cap on state and local tax deductions from $10,000 to $20,000, but only for the 2023 tax year. The tweak would apply to joint returns for couples with adjusted gross income below $500,000 in 2023. That would mean married couples could double their SALT deduction for the current tax season, which began on January 29th and ends on April 15th. After 2023, the SALT cap would revert back to $10,000 per filer, regardless of filing status, until the end of 2025, when the deduction limit will expire, along with many other provisions from the Tax Cuts and Jobs Act. The House may vote next week on the SALT Marriage Penalty Elimination Act, but the SALT deduction cap has created a topsy-turvy situation for some lawmakers. For instance, Republicans traditionally push against higher taxes for wealthy individuals. However, some view the SALT limit as a way to ensure taxpayers in wealthy states do not receive bigger tax advantages than residents of lower tax states. Before the deduction cap was enacted, about 71% of the SALT deduction was enjoyed by taxpayers with incomes above $200,000 a year. CBS News has said that Democrats traditionally support progressive tax policies that raise levies on the rich, but the SALT deduction cap also hits many middle-class families in states with high property taxes in the Northeast and West Coast, prompting some to push for a repeal of the measure. During the past few years, plenty of lawmakers have suggested rolling back the SALT deduction cap or easing it, but those efforts have failed to gain traction. According to the Washington Post, the most recent proposal has been introduced by a Republican lawmaker. This is at a time when more GOP members are increasingly interested in providing some relief to homeowners. Dear friends, have property taxes for your home increased? Please let me know in the comments section below. Well, my awesome and most amazing friends, that is the end of my daily stimulus update video for today. Thank you, dear friends, for being part of this community. I will be announcing several winners for the Walmart gift card giveaway every Friday. If you would like to enter these weekly giveaway, friends, please click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, friends, the greater your chances of winning these giveaways. Thank you, and have a wonderful and very blessed week.